uptick. The Nifty down about 15 odd points. The Bank Nifty down about 90 points.
6 points down on the Nifty, 2 down on the sensex.
Overall, the texture of the market remains on that consolidation level at that 17,788 mark.
It's a quiet day, absolutely quiet day. It's a small range day as well. So far, unless of course things change in the next 60 minutes of trade. Just 40 points away from the highs that we made previous Monday, which was the 17th. That was 17,863, and we leave off at about 17,820.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Markets end in the green despite a sell-off in global markets. Sensex and the Nifty gained close to 0.5%. The financials relatively outperformed. Maruti Suzuki reports a 20% revenue growth in Q4, even as it misses street expectations, announces capacity addition of 1 million new units through internal accrual. Stock ends 0.5% higher. Bajaj Auto is under pressure despite a strong fourth quarter result. EU Small Finance Bank tanks over 2% on concerns over margins shrinking and bearish analyst commentary. Mahindra Cie surges over 7% on reporting a 72% yearly increase in net profits. Tata Consumer gains over 1% after recording an all-round beat in the fourth quarter. Gujarat unveils a mandatory dividend distribution policy for state public sector units, directs them to declare a minimum dividend of 30% of net profit or 5% of net worth, whichever is higher. All 7 listed PSUs, which are profit-making companies, rallied in trade. Rallis India tumbles over 4% after reporting over 69 crores in terms of a net loss in the fourth quarter. MCX slips after its chief technology officer exits. All right, those were the top stories, but let's tell you what we have lined up on the show for you. We'll bring you market opinion from Dan Feynman, who's the co-head of equity strategy Asia Pacific at Credit Suisse, and Mihir Vora, director and chief investment officer at Max Life Insurance. In the corporate voices this evening, we have Rakesh Sharma, executive director of Bajaj Auto. Well, on to this day's trading action then. Dalal Street ended in the green even as global markets saw a sell-off. The Nifty managed to hold on to 17,800 after a range-bound session. Financials relatively outperformed, with HDFC Bank being the biggest contributor. Prashant Nair is here with a wrap.
A late surge leading to the market doing very well. The Nifty finally ending with a 0.25%, little over that in terms of gains. Banks doing even better. Banks have been the stronger of the two indices. And this after a day spent doing not very much. Price action was slow. The range was very tight as well. But the results by close at 3:30 are on your screen, both for the Nifty and the banks as well. Again, I mean, on the Nifty, there was not anything which was exceptionally up or down. Power Grid, Nestle, Tata Consumer, 3 names which were the top gainers. Gujarat, the public sector companies did very well. GNFC, GSFC, Gujarat Alkali, GMDC, and so on and so forth. The government, of course, has announced new policy in terms of dividend distribution, and the street was very excited. Big moves on volumes here. Market breadth improved into close, and that was a good thing. Broader market gainers include names like KPIT Tech, Mahindra Cie. Some, of course, like KPIT were result reactions. Others were not. Lemon Tree, KEI, Saxoft, Astra Micro are some of the names. Saxoft, by the way, is up 65% in this month. Losses coming through, and this is losses from yesterday. IPCA and Crompton continue to lose ground. MCX, there was a resignation, stock lost. Aavas Financiers, Rallis, Action Construction, KEC were some of the other names which lost. Now, the market in the Nifty is very close to 17,863, which was the high from last Monday, the swing high, the 17th high, and we're about 40 points away from that. Above that, a solid close above that gives us visibility that more upsides perhaps could open up. What we want from US, of course, is continuity. It's an earnings-heavy week like what we saw with Microsoft and Google reporting, and more will report later today. And, good results and continuity and stability in the US market perhaps provides us with that impulse when we come back tomorrow.
Okay, all right, Prashant, thanks very much for that. Well, in some opinion today, Mihir Vora of Max Life Insurance is cautious on the consumption stocks versus a few months ago, but finds NBFCs attractive.
Autos, I would say it's still a mixed bag. While we see some amount of pent-up and low base effect in the two-wheeler segment, the passenger vehicles, which is the car segment, still is a question mark. We'll need to see this month's number. And initial indications are that there is some slowdown in the overall discretionary spend, whether it's in auto or even some segments. So I'm a little bit cautious about consumptions compared to, say, a couple of months ago. Even some of the NBFCs are now beginning to look interesting at these valuations. So I think we should look not only at banks in the private sector, but also the private sector NBFCs. And I don't expect any major negatives as far as the asset quality is concerned, even for the coming quarters. So I don't think asset quality is going to be an issue. We just need to monitor the margins because interest rates have gone up, RBI has taken rates up, and we are seeing a fight for deposits between all institutions, whether it's public or private sector banks. And of course, we also should see any signs of moderation in credit demand.
All right, on to the second headline now. Maruti Suzuki rallied despite marginally missing street estimates for the fourth quarter. However, the automaker reported a 20% revenue growth. Margins also improved for the third consecutive quarter. The company's board has recommended a final dividend of 90 rupees per share for this fiscal. Sonia is here with the key takeaways.
Well, thanks a lot for that. So Maruti's numbers were strong, but they were slightly below what the street was estimating. The positives in the numbers is that the margins have improved for the third consecutive quarter, and the margins for the company have gone up 130 basis points year on year at 10.4%. Also, the company has decided to raise its capacity by up to 1 million units, financed by internal accruals, and this is in order to meet additional demand that is coming through, including demand from the export markets. Overall, if you look at the numbers, not too bad. A revenue growth of almost 20% is what the company has clocked in at 32,048 crores. The EBITDA has gone up 38%, while the margins have improved to 10.4% versus 9.1%. The profits are up about 42.6%, coming in at 2,623 odd crores. If you look at the trend over the past many months, you'll notice that the margins are now at the highest level that we've seen in the last many quarters. That's purely because A, the supply side constraints have eased, B, the company has taken price hikes, commodity costs have gone down as well, and the product mix has improved, aiding the operational performance for Maruti.
Okay, all right, Sonia, thanks very much for that. Well, on to the third headline today then. Tata Consumer rallied over 1.5% on a strong fourth quarter performance. The company reported a 14% yearly increase in revenue. Margins beat street estimates at over 14% versus an expectation of 13%. Manglam Malu joins in with more.
Well, it's been a strong brew that Tata Consumer has reported this time around. The results have beat estimates on all parameters, and as a result of which the stock too has recovered from the lows, and it had seen a big move ahead of the numbers already. The revenues of the company upwards of 3,600 crores. The street was working with a number of around 3,500 crores, and that has flown through to the bottom line as well. The EBITDA of the company 512 crores versus expectations of 472 crores, and the net profit as a result of which at 345 crores is much ahead of street expectations of 265 crores itself. This has been led from all fronts. The India business reported a growth of 15% as against street expectations of 10 to 12 odd percent, and India Foods business grew 26%. Remember, this is the growth driver of the company. And packaged beverages business for India grew by about 1%. That was largely expected because of the big deflation that we saw in tea prices, whereas international revenue grew by 10%, and Nourishco has done about 181 crores in revenue this quarter as against street expectations of 150 crores. The biggest positive for me, however, is the sequential improvement that we've seen in the international business from 9.5% to 12.9%. That's the international business margins, telling you that gradual improvement will continue out there. And Starbucks has crossed 1,000 crores in revenue for the entire year, so that's an important milestone as well.
Okay, all right, Manglam. Thanks very much for that. Well, let's get back to autos now. Bajaj Auto was under pressure despite reporting what was a strong set of numbers for the fourth quarter post-market hours yesterday. The auto major has reported a 12% increase in revenues for the fourth quarter. Margins have also beaten estimates. Sonia is back with us to tell us more. Sonia, brokerage firms have put out their outlook on the stock as well.
Oh, absolutely. It was a stable set of numbers, no complaints at all, better than what the street was estimating. It's a 9-quarter high in terms of the margins for Bajaj Auto, and the margins, despite all the challenges, have improved 220 basis points. It's a third consecutive quarter of a margin improvement. If you look at the numbers, the revenue growth of around 7% despite a fall of almost 40% in its export volumes. The revenue growth was largely led by price hikes that the company took. They passed on the higher prices to consumers, and the domestic business business has also come back. The margins, as I said, improved to 19.3% versus 17.1%. Profits have gone up 3.4%. Now, the company says that it sustained momentum on the domestic front, which led to a strong double-digit revenue growth. Brokerages are a bit mixed, but here are a couple of them. Jefferies says that it was a strong Q4 in what was a tough environment. They retained their buy. They raised the target price of to 5,100 versus 4,800 earlier, and they've raised the FY25 EPS as well. Motilal Oswal has a neutral, but they say that it's a strong product mix that has driven the all-round beat, and there are three main catalysts for future growth. One is the Chetak electric vehicle ramp up, which the company spoke about as well. They're looking to ramp up to 10,000 units of production in the next few months. The Triumph product launch, which happens on the 27th of June. There's a new premium motorcycle of Bajaj and Triumph, so that's the next big trigger, and the recovery in exports as well. Morgan Stanley has raised their target price from 4,486 to 5,063. They say there's notable upsides in the near term, and the 4% dividend yield is also something that keeps them overweight. So let's listen in to what the management told us earlier in the day.
Improvement in margins is really on account of three things. One is, of course, we've benefited from the gentle devaluation of the Indian rupee, though the export component has come down, but that's helpful. Then all the cost increases which we have faced, which are not too much, but there are some incidences of cost even on account of the changeover to things like OBD2, though it was very recent. But the approach has been to judicially pass these on. And the third factor has been actually the most significant one, which is the richer mix. We are now, 60% of our domestic business is in the 125cc plus segment.
Okay, all right. That's Bajaj Auto. But Sonia, you've had a busy day. Coming back to you about Mahindra Cie, which also reported numbers. The company has recorded an over 72% increase in their net profits on a yearly basis. The stock rallied over 7% on the back of their numbers. Sonia, tell us more.
So, there were no complaints at all in Mahindra Cie's numbers, a very strong set of numbers coming in from the company. And the company said that the margins have improved substantially this time around because energy prices have fallen, especially in Europe, and the European business has stabilized. Now, this is important because remember, in the last 1 year, there was huge pressure in the European markets, and now that seems to have come to an end, benefiting a lot of these large players that have an exposure there. They also talk about how the revenue growth, by the way, was very strong, almost a 20% growth, 18.5% growth compared to what they saw last year. EBITDA up 35.7%, and the margins have improved 200 basis points at 15.6%. Profits as well up about 73%. Now, this is a record margin performance for them. If you look at the performance in the last 5 quarters, on an average, Mahindra Cie has recorded anywhere between 11 to 13% margins. So this quarter, margins coming in at 15.6% is much better than the average of the last many quarters. If you also look at what the company is doing now, it's pretty much become a multinational, with Mahindra exiting a large part of their stake there. Mahindra Cie is now Europe's leading truck forging supplier. It's also India's leading producer of niche axle and engine ductile iron castings. It's the market leader in India for two-wheeler steering races and engine valves. So in its own spaces, it is the market leader, growing its business in a very good way, and hence the street has given it 2 thumbs up.
Okay, absolutely, Sonia. Thanks very much for that. But in more earnings, AU Small Finance Bank tanked over 2% on reporting a marginal decline in net interest margins on a quarterly basis. However, the bank recorded a 2.7% quarterly increase in operating profits. Abhishek Kothari is here with more.
The net interest margin has compressed this time around, and as per management, it is expected to compress going ahead as well. So the net interest margin is on a declining trend from current quarter, or let's say about Q4 FY23. So for the quarter, the net interest margin was at 6.1% when compared to 6.3% in the same quarter last year and about 6.2% in the previous quarter. The operating profit growth is at a mere 2.74% on a sequential basis, despite despite the fact that they have had robust loan growth. Last quarter, the operating profit growth was nearly about 11.5% quarter-on-quarter. So there is some compression seen in the operating profit growth as well. Cost to income ratio, that spiked to 63.1% when compared to 61.6%. They are having other expenses issue in the OPEX this time around, which has increased the cost to income ratio as well. Lower tax rate has aided in profitability. The tax rate is below 20% from the earlier level of a little under 25%. Asset quality remains good. It has improved. Gross NPA ratio is at 1.66% when compared to 1.81% in the previous quarter. The restructured book has also declined to about nearly 1.2% when compared to 1.66% in the previous quarter. So in terms of P&L, both NII and PAT is a beat on our poll. Back to you.
Okay, all right, Abhishek, thanks very much for that. Well, we need to take a short break, but stay tuned. We'll be back in a jiffy with all of the other top stories. Welcome back. You're still tuned into Markets Today on CNBC-TV18. The fourth headline this evening, shares of all 7 listed Gujarat PSUs rallied in trade today. The state government announced a mandatory dividend distribution policy for state public sector units. The government has directed these companies to declare minimum dividend of 30% of profit after tax or 5% of the net worth, whichever is higher. Sonal Bhutra is here with more.
Thank you so much for that. A big move is what we've seen across these stocks today in trade. That is because the government of Gujarat, they've changed their dividend allocation policy or ways to reward the shareholders of these companies as well. In their policy note, they say that in terms of dividend, the company should be paying 30% of PAT or 5% of net worth, whichever is higher, to the shareholders. And in terms of the buyback, a PSU which has at least net worth of 2,000 crore rupees and cash and bank balance of 1,000 crore rupees should go ahead and issue and announce a buyback as well. For bonus shares, the surplus and reserves, if it's equal to or more than 10 times of the paid up share capital, and they can do a share split if the market price or book value exceeds 50 times of its value currently that they are stating as well. There's 7 of them. All of them are up and buzzing in trade on the back of an expectation that maybe, yes, now the shareholders will be rewarded at a higher level. Now, I just took a look at all the financials of the companies as well as to whether they do qualify for this or not. And there was an interesting take that GNFC is the one which can actually do all the things that the Gujarat government stated in its policy document. They have a cash of around 1181 crore rupees. They have profits of 1704 crore rupees, and they have a net worth of around 7991 crore rupees. So they will be able to meet all the criteria that is set by the government without taking any stress on their balance sheet as well.
Okay, all right, Sonal. Thanks very much for that. Well, let's move on to the fifth headline this evening. Rallis India tumbled over 4% after recording an over 69 crore net loss for the fourth quarter. However, the company's revenues grew 3% on a yearly basis. Sonal is still with us. She gets us more.
Focusing on Rallis India today because that stock is under some pressure. This fall is not big, but the numbers are really weak for the company. Yet again, it's a consecutive weak performance by the company, and this time around losses have in fact widened despite whatever the industry has been seeing. Now, losses have widened. That is because of high cost inventory and higher expenses which have dented performance. Revenues are up 3%, but EBITDA loss has come in at 66 crore rupees, which compares with 3 crores in the year gone by. Loss has come in at 69 crores versus loss of 14 crores, and gross margins, they are down 800 basis points, coming in at 26.7%. The company says exports are down 25% YOY, they're down 7% sequentially, and domestic crop protection business also reported flat YOY growth, and there was an impairment cost of around 23 crore rupees, which was accounted for in this quarter as well. So there were a lot of one-offs as well that impacted company's performance in this quarter. The company recently, in fact, a few hours back, did their conference call where they said 14% revenue jump was supported by 8.5% price growth and 5.5% volume growth. However, pricing has peaked in FY23 according to the company. It has softened and is expected to decline going forward, and that is a point to worry for the markets and the company. High channel inventories in domestic as well as international markets is what they saw, and they expect volume-led growth, but there will continue to be pressure on margins due to high channel inventories. So high channel inventory, that's a problem that's happening across the agrochemicals and the chemical space as well. They expect to scale up products which they introduced introduced recently. They're focusing on new product development, marketing and distribution as well. And for FY24, the capex is 150 to 170 crore rupees, where they are also expecting last phase of their multi-purpose plant to be completed very soon. So the key takeaway is they expect margin pressure to continue, and that is something which could worry the street because they've not been performing well for last couple of quarters, and that has continued now as well.
Okay, all right, Sonal, thanks very much for that. Well, let's move on. Multi-commodity exchange MCX stand close to 8% on the news that the company's chief technology officer has resigned. Another person will take over as the interim CTO. Surbhi Saratia joins in with more details on this.
Thanks so much for that. So MCX is reacting today, and that is because their Chief Technology Officer, Mr. Shashank Sathe, has resigned. And in the interim, Dr. N. Rajendran, the Chief Digital Officer currently, will be taking over. But the main concern for MCX is regarding their implementation of the new tech platform by TCS. Now, MCX was supposed to switch to TCS as a software service provider last year, but that did not happen, and they have extended their current contract with 63 Moon Technologies till June of 2023. Which is why their software support expenses in Q3 also was up by 3 times, nearly 68 crores versus 22 crores on a year-on-year basis. And this pain of escalated software costs was going to last another 2 quarters. In Q3 con call, management did seem confident of launching their new platform in Q1 and switch successfully to TCS as a software provider, and they were going to plan more mock sessions in Q4 and Q1. So till the switch doesn't happen, that overhang is going to remain on the stock.
Okay, all right, Surbhi, thanks very much for that. Well, in other news then, the latest on Reliance Capital resolution saga, the second round of the auction has concluded, and sources say Hinduja Group was the only bidder to participate. Ritu Singh has been tracking this story. She joins in with more.
That's right, Ekta. This is the second round of auction for the company. After a lot of legal issues, the matter is still pending in Supreme Court, and anything that happens in the second round will be pending the outcome of that Supreme Court order, which is only expected much later in August. That said, the second round did take place today. There were 4 suitors, but only one came forward, and that is Hinduja's IIHL. They've made an offer of 9,650 crores. Is what we've been given to understand. Surely an improvement over the previous round, where Torrent had emerged as the highest bidder with an offer of 8,640 crores, and also an improvement on the revised offer that Hinduja had tried to make at about 9,000 crores. And all of this is in net present value terms, but this still remains far lower than the liquidation value, which is pegged at around 12.5 to 13,000 crore rupees for Reliance Capital. In this round, the base bid itself was set at 9,500 crores. So this offer is not much higher than that. But the good news is it is all in upfront cash payments. So that's one relief for the lenders. Now, Torrent, Oaktree, Piramal, none of the other participants came forward to submit any bids in this round. Torrent's matter, which had challenged the second round, is still pending in the courts. Now the question is, will the lenders accept this and move forward to submit this in the NCLT for its nod, or will lenders renegotiate? That had been one of the biggest concerns of the suitors so far. As of now, a bit of a relief that they've at least got this one offer from the company. Remember, the total outstanding claims are over 25,000 crores. So even with this offer, we're looking at a haircut of more than 60% for the lenders involved.
Okay, all right, Ritu. Thanks very much for that. Well, on that note, it's a wrap on this edition of Markets Today. We leave you with some more market opinion from Mihir Vora. Thanks very much for watching.
Pharma, our preference is more towards the domestic market, because that's where you have some pricing power and branding benefits, distribution benefits. As far as the US market is concerned, the call every year is whether the worst of the generic price erosion is over. And while we have seen some moderation in the rate of decline, which is decline in the rate of decline, but it's too early to say whether the worst is over. We are still probably not past the sharpest US recession quarter. So you might see some more deceleration in US corporate spending, retail spending, etc. So maybe things get a little bit worse before they get better. So I would be more cautious on US tech spending and by corollary the Indian IT services space.